As of November 2024, gold and silver show bullish momentum driven by favourable macroeconomic factors. Gold's price remains strong with forecasts pointing to continued gains in 2025, fueled by anticipated US interest rate cuts, robust central bank purchases and ongoing geopolitical uncertainties. Analysts expect gold to potentially reach new highs if these trends persist, particularly with the Federal Reserve's likely to shift to a looser monetary policy and a weaker US dollar environment. Silver has also rallied, benefiting from similar tailwinds. With technical support levels around $32, silver has upside potential tied to industrial demand and limited physical supply. Both metals offer a hedge against financial market volatility, especially with major events like the US elections and macro and economic slowdowns in key regions. G'day folks, welcome back to another update. Today we're looking at gold and silver. Before we go any further, make sure you hit that like and subscribe button to support the channel. So here we've got the trends for the monthly, weekly and daily charts for gold. So first looking at the monthly. Now we don't often do Fibonacci extensions. I don't like doing them. I prefer to do Fibonacci retracements. But I've got a couple of extensions here to show you. This one goes from that low to that high and then bouncing off that retrace. You can see there the current price is currently sitting around 100% extension level on a Fibonacci. But in the shorter time frame, again this is a monthly chart, we go from that low eventually to that high down to that low there. You can see there the price is currently hovering around the 123% Fibonacci extension. Again, I don't like doing these that often, but when they do show some pattern, it's probably worthwhile exposing them. Now, in terms of a Fibonacci, a bearish divergence, you can see there we had a bearish divergence here over a couple of years almost, versus a double top, and a minimum retrace there was a 23.38% level. So if I draw the Fibonacci retrace back to that low, you can see the 23.38% level. I prefer to do these more than the extensions because they do show us a retrace. In this case, it bounced off the 50% level, which happened to also coincide with this diagonal ascending trend line. So the retraces are generally more favourable, if you like. But at the moment, on the monthly, the CCI is still above its moving average, although it's pulling back a bit with a bearish candle this month so far. But the price is still making potentially new highs. Now, that's the monthly. If we look at the weekly, we've got a bearish divergence still in play. Again, between those highs, lower highs in the CCI versus higher highs in the price. And here I've actually drawn a Fibonacci retracement with that 23.38% retracement target level. You can see there that wick has probably just touched it. We may see further declines. The CCI is still falling, so we may see actually further declines in the coming days and weeks possibly. So bearish trades only on the weekly. Now on the daily, we had a couple of divergences here. We had a few, and I've always marked them with these little rectangles, these little bearish divergence. We had the first one here that fell and hit that range in there, it sort of went sideways for a while. And then in that smaller range, we had another bearish divergence. Now at the moment, between those highs, lower highs in the CCI versus higher highs in the price, that actually too has fallen back. So if I pull that back to that low there, we take it back to the previous low before that divergence started, a significant low. You can see there it's already penetrated that 23.38% level. And it's actually coming towards this 50% retracement level. Notice also it's hit this minus support at 26.05, and it may possibly bounce from there. We're seeing a bit of a slight pullback on the daily with the CCI pulling back towards its moving averages. That's on the daily chart. Now if we go to the intraday, we only take trades on the intraday in the direction of the larger time frame, in this case the daily, so we only take short trades. So you would have been wise to take a trade there, for example, when it broke below on that CCI there and also below the moving average. You would have taken that trade and you would have exited when it hit that CCI range in there, and exited on that point there near the bottom of that little range. And again, wait for it to break to the downside. It had a little bit of a false break there, and then it broke up again. So you might have actually got out with a break even or even a small loss on that one. At the moment, the CCI is breaking to the upside, giving us a bullish signal. So don't take long trades. We only take short trades in line with the daily chart, which is short at the moment. It's only short trades to be taken. Next, we'll look at silver. Now, silver's got a similar pattern. On the monthly, it's bullish above its moving averages, and so it is on the price chart as well. You can see there another Fibonacci extensions hovering around the 100% level. I won't draw the smaller extension, but that would be around about 123 level, similar to gold. On the weekly chart, we do also have another bearish divergence versus higher highs on the price. It came down, hit our target range. At the moment, the weekly is a fresh breakout on the downside, below its moving averages on the CCI. And on the daily, now there was a little bearish divergence there. Broke down, hit our target, then it bounced. And at the moment, the price is still dropping in line with the CCI, also dropping below its moving averages. It's only short trades to be taken on the intraday. Now, if we go to the intraday charts, again, taking short trades only. Again, another trade you could have taken back there was when it broke below the CCI and the moving averages of the price chart, and you would have closed it out when it broke into that moving average range, so near that bottom there. Even though the price dropped, you would have been wise to be careful, because here we've got a bullish divergence versus lower lows on the price, and in this case it bounced and it hit our target area. And if I draw a Fibonacci for those new to the channel, we go back to that recent high before the divergence started, and that's at 38% target range. So it's already hit that target, and now it's heading towards a 50% retracement level. We can't tell how far it's going to go necessarily. We've watched the CCI and monitor that, and if that falls back into that moving average range, then we potentially look at a reversal from where it is at the moment. And if it fell below that moving average range on the 1 hour chart, you take further short trades in alignment with the daily. Avoid taking long trades in this case, because you are going against the trend. Even though it could play out for you, again, we're trying to improve our probability by taking trades in the direction of the larger time frame trend. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.